That's the cool thing. Like you've built a business whether you like it or not, and now we just have to make a few tweaks to the business structure, and you can start playing the game like a big business and save way more money.
Hmm.
I've been in your shoes before. I've had that $20,000-$30,000 tax bill from self-employed income,
Hmm.
and it sucks.
Yeah.
It
Yep,
sucks.
absolutely.
And then I made a few changes, and the next year my tax bill went down to 8 grand, and I was over the moon. And we made more money, and it was so cool. And we did that by setting up our structure in the right way. So let's talk a little bit about that. Oh, I love it, man. I saw your notes, and I'm looking forward to getting to know you a little bit and talking about your business, man. This is kind of exciting what you got going on. Would you mind telling me more?
Sure. Yeah, I've got a lot going on. I've been running my own business since 2010.
Fantastic.
Never formally incorporated or anything of that nature, really
Hmm.
just self-employed. Um, Thought about it many, many times. A lot of questions where I probably should have just went out and found a CPA or something to help me out with all of that stuff. But nonetheless, I'm here. So,
For
and
sure.
there's a couple of questions really from the mindset of being a husband and father that I want to kind of put forward, like the better kind of let's do this like an adult kind of thing.
Yeah, no doubt.
Um, so, like I have two young kids, both of them are under 5.
Okay.
Wife, house, the whole 9 yards. I'm trying to build in more leveraged assets in the business versus client services stuff. And that's kind of really where my head's always been at. Like, hey, I'm vetting these clients. Most of it is client services work. Like I'm not too concerned that somebody is going to be like, hey, you just destroyed my business. I'm suing and taking everything you got. Knock on wood, I haven't had that experience. For this whole time, I've had great clients and so on and so forth. But like I said, I'm trying to build more leverage in the business to pull me away from the screen. Um, and that comes with like courses, digital products, memberships, consulting, things of that nature where I'm not as hand-on and I'm not as walking in lockstep with people. It also means
We need to get
more
your time
people
back.
coming in. Right.
Okay.
So that's where my head's at with it. Now I have two sides of the business, obviously. So I have the client services side of the business. I also have like selling digital products and
Great.
membership site and
Great.
things like that. So some of my questions are surrounding like how do I handle multiple brands? Do I just,
Mm.
like I watched those videos and I heard you a couple of times say you have multiple companies and then a holding company,
Hmm.
things like that. I don't want to be too complex. I'm just me.
Right.
So,
For
I
sure.
don't, I'm not really, I might hire a contractor here and there, but it's not like I have like a big office in New York City or something like that. And I've got,
Sure.
1,000 employees. So that's one of my big questions is what sort of kind of structure should I make where I have multiple brands?
Yeah.
And then the other factor that it is my wife is a freelancer. When we had our first son, I basically told her to quit because her
Right.
company was moving, commute, and
Hmm.
all that stuff. And
Yeah,
really,
yeah, yeah.
she looked at it more like a job. I said, look, I can scale my business faster than you sitting in a cube somewhere. And she's a freelancer. She kind of makes the money that kind of allows us to go on vacation and go out to dinner. Like she's not like I'm the breadwinner, so to speak, right? So my thought was do I pull her under, or is it just better to leave her as a self-employed, that sort of thing? So
Okay. Two very
just
good questions.
yeah, so those are some of the big questions that I have. If you have any thoughts or insights or anything,
I
maybe
do.
even direct me.
Yeah, yeah, absolutely. So I'm gonna ask you a couple questions because I mean there isn't one size fits all, and it's
Right.
tough. It's tough because I do things the way that I do things because eventually one of these companies I want to cut off and sell. So that's why I've chosen this structure. But a lot of people, I haven't gotten to explain that to a lot of people, and so it's important that we figure out what you want to accomplish before we talk about the structure. So you and your wife, you're married, correct?
Yes.
Okay. What state are you living in?
New York.
Okay, gotcha. So you're married in New York, and so you file taxes jointly.
Yes.
Okay, awesome. And you've been in business since 2010, just more or less. I know this is, short form, but you more or less help people scale their businesses, either hand in hand or with other products.
Yes.
Awesome. Like just defining the customer, defining the best launch strategy, like, how to provide solutions for them, how to market to them, things like that.
Yeah. Yeah. Mostly through email and website stuff, not necessarily paid acquisition or anything like that. But yeah,
Okay,
at a high
wonderful.
level.
Now that I have a better understanding of your business, you have 2 kids, you're married, you're living in New York. Do you have any other properties, or are you just living in this one house?
Just this house.
Okay, got it, got it. And so it's really a matter of figuring out how to structure your company so that you can keep the most amount of money, protect your assets, and then whether you should involve your wife in your businesses right now or keep her separate, based on what's going to help you tax-wise, really.
Yeah.
Okay, cool. So let's unpack that a little bit. What is the name of the business that you run yourself, Jason?
Well, it's right now just under my own name.
Okay, cool. So you're a
But
sole proprietor. Do you have an LLC set up at all?
nope.
Okay. Do you have any separate bank accounts, or are you using one bank account for everything?
No, that's the only thing that I was smart about is
Cool.
keeping everything separate. So, my wife and I, we have a personal bank account, but everything in the business has a separate bank account.
Okay, great. Oh, great, 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 great. How much did you pay in taxes approximately last year?
I guess I would say 25,
Okay.
I think 25,000 around there.
Okay, and that's you and your wife filed jointly, so it's her freelance income plus your self-employed income.
Yes.
Got it. Okay. Just trying to. These are good questions, dude. These are good answers. I'm really starting to figure out what you want to accomplish. Now, Jason, do you ever plan on selling your business?
It's not something that it's not in the plans.
Okay.
Let's put it that way. Yeah.
Okay. So right now, it would be ideal if you could continue to build and scale your company while your wife's doing her freelance work, and you would just set up your company in a way that can keep you more money, take advantage of the tax laws, basically, because you're building a business, whether you like it or not. That's the cool thing. Like you've built a business whether you like it or not, and now we just have to make a few tweaks to the business structure, and you can start playing the game like a big business and save way more money. I've been in your shoes before. I've had that $20,000-$30,000 tax bill from self-employed income, and it sucks.
Yeah.
It sucks.
Yep, absolutely.
And then I made a few changes, and the next year my tax bill went down to $8,000, and I was over the moon. And we made more money, and it was so cool. And we did that by setting up our structure in the right way. So let's talk a little bit about that. So we're gonna call it Jason LLC, just for the sake of discussion when we do come up with this stuff. So you're in a position right now where you're fully self-employed, and so we need to take a few steps to get you into to level your business up, for lack of a better term, to take you from that self-employed status to an LLC and make you an official business. And then once we have you established as an LLC, we can change the way that the LLC is taxed and turn it into an S-Corp. And that is going to save you a ton of money right off the bat, just by making those two changes. The LLC isn't going to save you money in taxes. That's a big misconception, at least for me it was. LLC is just going to allow you to take your business activity and go like this. And so you have Jason over here, Jason and your wife over here, and then your business over here. It's going to pull it out and create a separate entity. And so when we put your business assets or your business bank account, your business dealings, and your contracts all within that LLC, it gives you another layer of protection. But the cool thing is that LLCs can do things that regular people cannot do. Like you can't be an S-Corp as yourself. We need to first create an entity first that can be an S-Corp. And so that's the first step. And so we'll talk about the high level, and then I'll give you some resources on how to actually execute afterwards.
Okay.
So the high level would be form an LLC in New York, and then have that LLC taxed as an S-Corp. Tell me real quick, did you get an EIN yet for yourself, or are you using your social for your business?
It's my social.
Oh, this is perfect. Okay, so this is even easier then. So what we're going to want to do is we're going to want to form an LLC, Jason. After we form our LLC, we're going to go to the IRS and we're going to get an EIN. And that EIN, you've seen it, you saw it in the course and in the videos, the LLC and the EIN. And we're going to use those two things to open up a business bank account, specifically tied to the LLC, not tied to your social.
Okay.
And so now Jason LLC is going to have an EIN, a formalized LLC with New York. You'll have your articles of organization. And then you'll also have a business bank account, which is great. We can also take one more step, and we can go ahead and turn that LLC's tax status into an S-Corp. So now you have an LLC taxed as an S-Corp. Don't worry about like executing this. There's a lot of services and easy ways to get it done. So this is still high level stuff. So that way, whenever you're making money, instead of the money going into your bank account right now, it's going to go into the business's bank account. And that's where all the money's going to be collected. And you're going to use that business bank account to spend money on business expenses, computer equipment, rent, headphones, microphone, podcasting setup, podcasting hosting fees, things like that. And eventually there will be profits left over in that bank account. You're not going to spend all that money that you make. And so here is where the difference is. Normally, you would just have that money in your bank account and you could transfer it to yourself and just buy stuff, right? That's how you do it now. Instead, we're going to set you up like an official business. We're going to put you on payroll so you can start taking a salary. And then for half the money that you earn, and the other half of the money, we're going to simply transfer it from the business account to your personal account and call it a distribution. And so this is super cool because when you are taxed as an S-Corp, the IRS says, all right, you're jumping through the hoops. You are willing to play the game like a big business. We will allow you to have big business tax breaks. So all that money from the distributions, we're not going to charge you self-employment tax. And that will save you 15% right off the bat. Mm-hmm. Those wages that you're paying yourself, those W-2 wages, those are a business deduction. So we're going to write that off of the taxes. And so right there with those two things, it saved you a ton of money. And now that we have the business set up, you're like fully legitimized in the eyes of the IRS. They're like, dude, this guy formed an LLC. He has an S-Corp set up. He's following the rules. Like, he's on payroll. He's taking distributions. Like, okay, great. Now you can start taking additional write-offs that would normally be difficult in your situation because you're just a regular person. But now that you have a business, you can get a little more freaky with it. You can start writing off your vehicle expenses. You can take this office and figure out the square footage of it, and you can write off a percentage of your mortgage based on the square footage of your office. Every time you go out to eat, business expense, swipe the business card. You can write that off 100% on your taxes. You can write off all your mileage, your vehicle expenses, and you can start doing things like the Augusta rule and renting your house back to your company for production stuff. Because you have a production setup, and you can take advantage of things like the Augusta rule, which is great. Yep, you could do all kinds of cool stuff. So that's really what we want to start to achieve with you specifically. Like, that would be my goal if I was in your shoes, is to get to the S-Corp level so that I could save more in taxes, keep more of my money, and then start taking advantage of better write-offs. You're just leveling yourself up. Not only that, but it's really going to help you when it comes time for, buying investment properties with your income based on your tax returns. Right. It's going to make things just so much more legit. Mm-hmm. Your wife. Now, let's talk about this. The second part of your question. Should you include your wife in this business, or should she remain separate? In the eyes of the IRS, they see you as one entity. Okay, so you and your wife's income is pooled together, and then you pay taxes on the entire amount. Well, you, your wife, and your business now. It's all pooled together. You pay taxes on the entire amount. And so the question is how much is your wife making, and how can we take advantage of it? So can you tell me a little bit more about what she does as a freelancer?
Yeah, so she does basically Google Adwords for local businesses. So things like plumbers, lawyers, that's even like candy shops, things like that. And she just runs the ads for them. She sets them up, runs the ads. She does maybe a couple hours of work every day, like maybe 2 hours, 3 hours of work. It's not a ton, and she doesn't really go out there to look to acquire a lot of customers. She actually has partnered up with a former boss of hers that started his own agency. So she just does a lot of overflow work, and he pays her, be it just 1099. And that's, it's pretty simple. She's not looking to grow it at all. She's like, I'm good with this. This is perfect, so.
About how much is she bringing in monthly?
Monthly, well, it's actually less now because the whole pandemic basically squashed her because the local business is being closed. So she's, I guess, 2,000, 2,500 a month.
There's two ways to do it. You can have, because she's paid 1099, you have a ton of flexibility, and especially because you're married too. And so there's a couple different options depending on what you want to do. Me personally, if I was in that situation, I might want to go the easy route and just have her become a part of your company with you, and then have the ad agency just pay your S-Corp that you're going to form, your LLC tax as an S-Corp. And so all the money will be collected in the business and then passed to you and your wife after it gets collected in the S-Corp. You'll be on payroll. You can even put her on payroll too, and you can take distributions out that way. And that will save you money on taxes. Because what the problem is that when your wife is paid 1099, that money goes directly onto the Schedule C of your tax return. And the Schedule C is just like somebody just giving you money, and you have to pay full taxes on it. You have to pay self-employment tax on it. And it's kind of sucks, dude. It's an extra 15% you got to pay. Mm-hmm. And so I would find a way to get it passed through the S-Corp. That's our goal really here, is to take all your income that you guys are earning and pass it through your S-Corp before it gets to you. By filtering it through your S-Corp, it shaves a lot of money off.
Right.
So you could do it that way. Or so you could have like her boss pay your S-Corp directly, even though she's doing the work. Like that could totally work. She doesn't even have to be on the company if you don't want to. She can just be like a ghost because you are technically married, so there's really no problem with that. And then you can just get the salary and the distributions, put them in your personal account, and move the money around there and spend it like you normally would. That's one option. The other option is to start a separate entity, like a whole nother LLC. I just don't see a lot of advantages with that because it's not going to save you taxes right off the bat. You could go even further and create a whole new LLC taxed as an S-Corp, but for that amount of income, it's not really going to make that much of a difference unless you wanted to create an entity that you could eventually give to your children. That's the only reason I would create a separate company, is a separate company that you could start working on business credit and just have established so that you could give it to your kids so they could use it. But in the interim, the easiest way to do it is to either leave it exactly how it is so that you don't have any other complications, or have them start paying your new company so you can filter the money through and pay less. That's what I would do.
Okay.
Yeah.
Okay. That makes sense.
We have options. Do you have any questions on that setup? Because I know I kind of just threw a lot at you.
Yeah, no, I don't think so. I think, I don't really have any questions on the high level stuff for sure.
Okay.
So.
Okay, cool. Let's talk about like physically though, like how to execute that. Because this all sounds great in theory, but like who's actually going to help you get it done? Mm-hmm. And like where. So there's a couple things that you can do. If you're the type of person that wants to do it all yourself, that you can absolutely do this all yourself. It's doable, and I know you have what it takes. You're definitely smart enough. What you would need to do is you could form the LLC on your own. You could use something like INC file, which is the best way to form an LLC in my opinion, just because their user interface is so awesome. And I can send you a link after the call too. And once you have the LLC, you can go get your own EIN. You can go open up your own bank account, and then you can file your own S-election form even. I'm putting out a YouTube video on how to do that, and it's also in the business school. So you could totally do this all on your own. The challenging part is come tax time, you are going to have an additional tax return to file, 1120S for your new S-Corp. So you're going to have your personal tax return with your Schedule C, and then you're also going to have your S-Corp tax return. Who does your taxes right now?
Me.
Okay.
Yeah.
Okay.
And so I just do TurboTax, so it's not even like,
All right. Are you the type of person that would dig into the numbers, the analytics, and stay organized and like really dig into the nitty gritty and focus on your write-offs and managing all that? Or is that something that you would rather farm out for a couple $100s a month?
To be honest with you, I would actually probably farm it out.
Okay.
While I would want to know, and like you said, dig into the analytics and stuff like that, I am an organized person. So like if they told me, hey, I need all your expenses in by this date, I would be able to do that. And, whatever they tell me to do, I would have it filed because I'm pretty organized already with that. But yeah, ultimately, like come tax time, I'm like, oh, this sucks. Like, I don't want to do it.
It
this
fucking
crap.
sucks, dude. It's
I don't understand it.
Yeah.
I understand it, but I don't understand it. And it's just like, hey, yeah, I'm like, what can I take off? Can't I take off? What should I pay attention to? Where are the things, I don't want to raise red flags and things of that nature. So yeah, farming out might be the better approach.
Okay. Well, the good news is there's plenty of options. There's plenty of options. I've done both. I've done it myself, and I hate it. I hate it. I absolutely hate it. I would rather collect everything and have the bookkeeper manage all the transactions, reconcile everything, and then, she comes to me once a month and says, "Hey, can you give me a little bit more insight on these transactions?" And that's the most of what I have to do. Mm-hmm. At the end of the year, the taxes, that bookkeeper, all the stuff that the bookkeeper does, I give it to my CPA. And my CPA prepares my tax return. He says, "Hey, does this look good?" And I'm like, "It looks great, man. Did you catch all these write-offs, by the way? I have a whole list of stuff that I want to make sure my CPA catches." And he's like, "Yep, we got it right here, and right here." And I'm like, "Okay, cool. Let's send it in." And that's the extent of what I have to do with the finances. And I like it that way. But it costs a couple $100 a month extra. Mm-hmm. So there's a service out there. It's called Collective. And the reason I'm bringing them up is because I've done some work with them in the past. And I reached out to them to see if I could recommend them to people. And what they do is they are your one-stop shop for solopreneurs, just like you. So what they do is you go to a service like Collective, they set up the LLC for you, they turn it into an S-Corp for you, they get you a QuickBooks so you can start managing your accounting better with a team. They handle, the payroll and all that stuff that you would do with an S-Corp that we mentioned. And then at the end of the year, they also do your tax filing and tax prep for you, which is really cool. And so they manage all of that tedious back end so you can focus on just bringing in money. And they only charge like $200 a month. It's a pretty good deal. I like what they do and I like the solutions.
Are they, because I'll be honest, like, I think you talked a lot about California and I know that they're funky. New York is overly funky with a lot of different things. So
Agreed.
How familiar are they with like New York and all the business edge cases and all that kind of junk?
Yep, 100%. I know exactly what you're talking about. Let me pull it up because they don't work in every state. And I want to see if they work in New York or if they don't. They're working in 10 states and New York is not on the list. But that's okay. It's not a deal breaker. And I'll tell you why. A lot of solopreneurs, online educators, people like you and me who don't have a physical presence, right? You don't have a physical presence in New York besides your home address.
Right.
Technically, your business can exist anywhere in the world, anywhere in the States. Mm-hmm. And so, given that information, I've taken it and run with it too. And I formed companies in Wyoming, Texas, Nevada, different places that have favorable laws, including Delaware, because my business doesn't have a physical presence. It's an online education company or it's an online e-commerce place. We don't have a brick and mortar store. We can be anywhere. So what you can do is you can form your company in another state, a state that has more favorable LLC laws. And Collective could help you do something like that too. So you don't actually have to form your company in New York State. And this is how we do it. When you use a place like INC File, for example, and they're just like LegalZoom. When you're forming your LLC in the state, they give you the option, hey, do you want to use our registered agent? We have an agent here in the state that you can use as a registered agent. It's $100 a year. Oh, by the way, do you want us to give you an address here too? We'll give you a virtual address here in the state so you don't have to use your own. It's $20 a month. Mm-hmm. Anytime we get mail, we'll scan it and email it to you. If he wants to ship it to you, we can. And I thought those services were really cool because it's like, whoa, now I can open up a company in Texas and I can take advantage of, the Texas LLC laws and I can use an address in Texas for my business. I have a registered agent for my business. I can go be anywhere in the world that I want to be and and operate my company from my computer. Mm-hmm. I never have to collect my mail. I never physically have to be anywhere. I can move anywhere that I want and my information is no longer public. So I kind of like that option. And so I would encourage you to explore forming the S-Corp out of state with collective versus doing it in state in New York with local people. Those are like the two best options, I think, for you.
Yeah. The question, and I was thinking about that when I was going through the course, and you were talking about registered agents and stuff. And, like a while ago, I got in when I first started going down this rabbit hole anyway of, hey, I might have my own business. Like, do I form in Delaware? Like, people were putting their online businesses, but forming businesses out of Delaware. Right. My question that I had for you was with regards to when you start to go file, like it asks for your address. So do you need the registered agent prior to that? Or like what's the order of operations, I guess, in regards to that?
That's a great question. So when you register a business or your LLC, for example, they're going to ask you for the business address. Where is this business located? And you're going to give them the virtual address. Yeah.
Got it.
It's a physical address somewhere that's not a PO box. That's acceptable. Okay. What they don't want is they don't want a PO box. That's the only thing you can't do. You just can't do a PO box. And so you just pay a company, be like, hey, my company's going to use your address. I'm going to give you $20 a month. Sounds good, man. Which is great. The registered agent is a completely separate thing from the virtual address. Registered agents exist to accept mail on your behalf from the government. So just in case you're in like Cancun or across the world, the government doesn't have to go look for you. They can just give it to your registered agent and they will know that it's going to get to you. Registered agents are rarely used. My registered agents have never contacted me. Nothing has ever been sent to my registered agents in the last 5 years of owning multiple businesses.
Oh, okay. So I assume that the registered agent was that virtual address.
Separate things.
Oh, they're different things. Okay.
Two separate things. Yeah.
Right.
And it's ideal that your registered agent has to be in the state that you file your LLC.
Okay.
And your business address has to be in the state that you filed the LLC.
Got it. Okay.
Those are really the only two requirements. And so if you use that as like a basis of understanding, you're like, oh, holy shit, I could form a company in Utah or Texas and live anywhere, and they'll just send me my mail. Okay. Now the world's my oyster, and I can pick the state that I like the most.
Right.
Yeah. Now, you mentioned Delaware. Delaware is fantastic for C corporations, corporations that issue shares of stock. The places that I really like are Arizona, Utah, and Wyoming for LLCs. And that's because they're Wyoming's like non-disclosure. It means they don't tell your name, and Utah and Arizona are both pretty legit.
Got it. Okay.
Yeah. So what you have to understand too is that you and your wife are going to be paying New York taxes. You're going to be paying federal income tax and New York state tax because that's where you live. Mm-hmm. Even though the business is registered in another state, if it is, you're still going to pay New York state income tax. So you don't, even if you register your business in like Arizona, for example, you're not going to have to pay Arizona business taxes because you're not a corporation. You're a limited liability company, which is an extension of you. So just wanted to throw that out there just in case you had any questions on the final taxes.
So yeah, I guess the only question that pops into my head is sales tax, right? So where I sell things, that sales tax applies for, if it's, let's just say for the sake of argument, I form in Arizona, I have to account for Arizona sales tax if there is. So I have no idea if there is or not, but that's true, right?
Correct. Okay. Wherever your business is registered, that's where you'll be technically establishing an economic nexus, is what they call it. And an economic nexus is triggered in 3 ways. Wherever the business is physically located in, if you sell more than 2,000 units or $200,000 worth of inventory. Okay. So, yeah, it gets weird. And it's also charged county specific. So every county has its own tax code. But let me clear this up for you. Wherever your LLC is established, that's where you're going to have to pay sales tax on if you trigger it. You probably don't because they haven't really sorted out all of the nuances for digital products and service-based businesses, so you're okay now. But when they do, and if you start selling digital products, like say a course on email automation, and they're like, hey, states are charging sales tax now. You'll have to pay attention to, like, if you're selling into Georgia, Lafayette, Georgia, and you're selling, 2,000 units, into Georgia, they're going to be like, okay, you have established an economic nexus. You got to start paying sales tax now, bro.
Right.
But that won't be until, you start doing some volume. And then when you do, there's solutions out there to help you manage it, but it's the biggest pain in my ass, dude. Sales tax is the worst.
Yeah. Believe me, I know. As a developer,
Okay.
before I got into the email automation side, I was basically developing for e-commerce companies, and sales tax was always the biggest. Sales tax and shipping was the biggest problem. Sales tax on the business side, shipping on the customer side. So, yeah, I'm well aware. Cool.
Yeah, 100%. But either way, man, that's what we're going to work towards. And, there's nothing wrong with continuing to do what you're doing now, but you could level it up and you could totally make yourself into more of a legitimized business so that you can keep way more of the money that you're earning.
Yeah. I guess the one final question that I have is, so should I try to land it on January 1 to file, or how does it work like in mid-year, in mid-fiscal year?
Yeah, so that's a really good question. So typically what you would want to do is when people like us do our taxes, it's typically on the calendar year, January 1st to December 31st, right? And whereas you mentioned the fiscal year, which is July 1 to July 1 or whatever. So the calendar year, we want to have one set of how do I put this? We want to have one style of taxes to submit. So either all of our Schedule C or all S-Corp. We don't want to split the year into two different types of returns because it starts to get really weird and funky because money comes in at different times for things that are sold and it just gets weird. Mm-hmm. So there's two options. You move forward on January 1st with a new setup and just do it like that, or you take the extra steps to go back in time and make all of 2021 the new setup. And there's a few, little tricks you can do to make that happen. And if you really want to go for it, you can. You just have to know how to send in the right forms to the IRS so they'll buy into it, is what I'm saying. Because you're filing your S election and your LLC pretty late in the year, They're like,
right,
dude, it's December, like, what? But if you just tell them, like, there's a miscommunication between my attorney and my accountant, like, as to who was actually going to file. Mm-hmm. Like, I'm sorry, we made a mistake, and they'll buy it.
Okay.
There's ways.
Yeah.
In your case, I'd probably just move forward next year.
Okay.
Yeah.
And the timing would be enough where, it's December 1, right? So, if I filed, how long does it take to usually get it so that I could start on January 1? Or would I have to do, a rush order? How does...
You can expedite the LLC process, and that's going to be the longest one because you're going to wait to get your articles of organization back from the state. And so once you submit for your LLC, you need those articles of organization to show to the bank that you're a legitimate entity so they can give you a bank account. You have to have it. So you can expedite it for an extra $50 and you can get it done in a couple days.
Oh, okay.
Now,
I didn't know it was that fast.
Yeah,
okay.
It can be done pretty fast. Now, you're going to send in there's an S election form to turn you into an S-Corp and stuff like that. Here's what I want you to take away from this conversation. It's not important as to when you get the documents back. What's important is how the money is moving within your companies. That is the important thing. So even if you file your S election form and you don't get it till halfway through next year and they don't send it back to you, say, okay, you're good. As long as you're acting like an S-Corp and doing what the S-Corp would do and the money is moving the right way, you're good. So don't wait for the forms. Start walking the walk, and then the forms are ancillary.
Got it. So I could file for the LLC and the S-Corp, but I'll get the LLC information, the articles back from the state in several days, let's just say a week or whatever. Then I can actually apply for the EIN and get the bank account all within that short period of time. And then just start putting the monies through the business bank account, and that would satisfy the man, so to speak.
100%.
Okay. All right.
Yep, you're right. You're absolutely right. You nailed it. Yeah, okay. Just get that basic stuff set up, LLC, EIN, bank account. Start treating it like a separate entity other than yourself. Mm-hmm. And then we'll file your S election form. We can do it together, or we can have a service like Collective do it. Your CPA can do it. Doesn't matter. And then as soon as we file that form, we write on the form like when we want it to be effective. And so you just make it effective and then just start acting like it. You know, if the IRS takes a long time to send it back to you and process it, like that's on them. You have chosen to be an S-Corp. You start acting like an S-Corp. You file like an S-Corp. No one's going to get mad at you for it.
Got it. Okay. Makes sense.
Yeah. That's the way I look at doing business with the government. It's my responsibility to tell them how much they're going to get paid, not the other way around.
All right. Yeah, I like that.
Yep.
For sure.
So, yeah, I'm going to learn everything I can and do everything that I can to paint a good, clear picture using the laws that they provided in the tax code. And I'm going to be like, hey, man, I'm using your own laws. These are the ones I'm using. Here's how much I'm going to pay you. If you have a problem, you can audit me, but all of it's organized. It's all right here. All you have to do is take a look.
Okay, cool. I appreciate that.
Yeah. This is exciting for you, dude. This is an exciting time. Dude, just making a swap like that based on your taxes last year, like, dude, making a swap like that could save you like 15, 30 grand and just put more money in your pocket. And it's a no-brainer to be able to like learn the process, go through some of the hiccups. But once it's set up, it's set up. Like, you don't have to do it the same forever. And man, compounding, it's a great idea.
Yeah, and just even as a parent, I'm just like I get hit by a bus, like done. Everything's out. Like my wife is high and dry, the kids are high and dry. I'm like, that's no cool. That's no cool. Not cool at all. So,
Agree. I agree.
Yeah, I appreciate your time and explaining all of this. I know we went a little bit over, so I really do appreciate it.
I don't mind at all, man. For people that are students in the course, like, you have no idea how much love I have for you guys. Like, I think it's so cool that someone trusts me enough to learn from me and spend some money to, I think that's badass.
Yeah.
There is one thing I wanted to share with you though before you go, because you mentioned your kids, and I know that's important to you. Wealth preservation and making sure your kids are set up. I want to tell you what I've done for my kids, and maybe you would want to copy off me because I think it's a great idea. Your kids are young right now, and so it would be difficult to justify paying them with the business. And put money away into a Roth IRA for them right away because they're so young. But once they get to like 8, 9, 10 years old, they can start taking out the trash, sweeping your floors, helping you with social media, like whatever the case may be. And you can set up a joint bank account for them because they're minors. And you can pay them with your business up to $12,000 a year. And that's an expense for your business. You can write it off. And you can pay that joint checking account. You can pay your kids up to $12,000 a year. And then they'll have to file taxes, but they won't owe anything, which is really cool. And so what they have now is $12,000 sitting in a joint account that wasn't taxed. You can take that money, you can put some of it into a Roth IRA because they've earned it. They've worked in your business. And then you can take the other half of that money, you can put it into a UGMA, which is a Uniform Gift to Minors account. And the UGMA is it's a brokerage account that you and the minor own because minors can't own assets.
Right.
And so when they turn 18, 20, 21, they get full control over this investment account, and they can use the money for whatever they want. And so if you start doing this early, if you start putting money away for them in a UGMA, you can take advantage of compounding interest and invest it in the stock market or something. And when your kid turns 20, they'll have a couple $100,000. Like just chilling there, and they can use it to start a business, go to school, buy a house hack, like travel the world, like whatever they want. And if you also have a Roth IRA set up for them, one of those accounts they can't touch until they're 60, you could literally turn your kids into a millionaire by spending a few years of grinding away and implementing that steps. Even if they don't touch it, at 60, there's going to be millions of dollars in there.
Yeah.
Because of time in the market. And so I would encourage you to I want to put that seed in your brain. I just want to put that seed in your brain.
It's been there because I've been talking to other founders that, kind of in my own circle. And, some of them were like, they have older kids. And some of them were like talking about like, I just put my kid on the credit card that I know that I'm just automatically paying every month to get their credit up so that, they're like 10, 11, 12, 13 now, so that when they actually go get credit, they'll have ridiculous credit just when they need it. And they were talking about the Roth IRA. I haven't heard about the UGMA account, so that's interesting. I mean, my mom was talking to me about like a 529 account for the boys, and I'm like, yeah, but 529, like they're so young. I don't even know what the education system's going to look like in 10 to 13 years. Right? Like, is it going to be a college? And then looking at what kind of penalties that a 529 has if you don't use it for education. Like, you can use it towards trade schools, but you get penalized. But if you just like, I want to start a business and I want to use that, it's like ridiculous penalties on that stuff. So it's like, I'm like, yeah, my wife and I are starting to try to figure out and plan for their future, almost like behind the scenes, right? Like, they don't know that this stuff is here, but yet when it's ready, when they're ready, then it is there, and they kind of have that fallback thing. So
No doubt.
I
couldn't agree
you
more.
sharing that.
Yeah, I didn't choose a 529 because of that. I don't believe in college. I don't want to pigeonhole my kid in having to go to college to use that money. And I've heard horror stories of people with the penalties and trying to get the 529 money. So I'm like, fuck it, dude. Here's a UGMA. Yeah, you'll pay some taxes on it when you get the money or when you spend it, but I don't give a shit, dude. Like, it's easier. It's better because now you can go buy real estate and leverage it. You know, you can do whatever you want. And I think that's so cool. And you and I both know how the education system is. It turns out really great employees, but it doesn't teach you what you need to make it on your own.
Right.
And so, you know, who knows what's going to happen in the future. I 100% agree with you.
Yeah. I mean, for me, like, it's funny because my wife has a master's degree and all that, right? And like, for me, I went into college in the late 90s and I had this big blown up fight to drop out of college, and I wanted to go to Silicon Valley, where, you know, in San Jose, and like, hey, the tech stuff was blowing up at that point. And I had a skill that I was like, hey, I'm making websites. You know, that's cool. Let me go out there. Big blown out fight with my parents at the time. And like, my mom's like, I don't even remember that, but like, it was ingrained in my head. She was like, no, you got to stay in school. You got to get that piece of paper. You're the first one in the family, and like this, that, and the other thing. I'm like, yeah, but I'm not going to do that stuff. Like, you know, like, I don't use a lick of college. And so this is going to be one of those things that my wife and I, my wife, if my kids want to go to college, awesome. Like, God bless. But here's the scenario here. You're going to come out with a boatload of debt, unless you get a full ride, which nobody gets a full ride, and, you know, that sort of stuff. So I'm just like, looking at the education system the way it is now, like, it looks like to me it's going to be like the end of the world wars, where people just went to trade schools versus like these general behemoths that just like, hey, give me a Mercedes, you know, drop it on our steps every single semester because of whatever. Like, I'm like, yeah. So yeah, I'm with you. And that's why I'm like 5 to 9. I'm like, I know why you're saying that, Mom. Like, as a grandparent, it makes sense, but I think we want something else, like, for them, just in case. So
it's our jobs as parents and as children of our parents and parents of our kids. Like, it's our jobs to evolve and set the starting line a little bit further ahead.
Right.
You know, like, my starting line was way further ahead than my dad's, and his starting line was way further ahead than his dad's. So now it's my job to get my kids even further. And I've taken the knowledge that they've given to me and I've built on it. And we're evolving, dude. Like, we're evolving beyond that. And we're going to teach our kids how to do the same. And I think that is really important to have in the forefront of our minds, dude. I love what you're talking about, Jason, dude. I love it.
Yeah, appreciate it, man. Appreciate it.
Super cool, dude. So if you have any questions on this stuff or you need anything from me, just let me know. You can email me. You can shoot me a DM on Instagram, like, whatever you want. I'm here to help you out with whatever you need. So.
Great. Appreciate it.
I hope you have a wonderful day. I really enjoyed meeting you, dude.
Yeah, absolutely. Likewise. And if there's anything you have a question on, email, automation, tech, I'm here to help too. So
yeah, we should do a podcast swap soon. That would be fun.
Awesome. Cool.
Yeah, I'd really like that. I'll shoot you a follow-up email in a little bit.
All right. Sounds great.
All right. See you, Jason.
All right. Have a good one.
You too. Bye.